Welcome to Properties, the podcast that cuts the property industry to the bone. We answer your questions with our expert guests and call out all the bullshit that makes the industry only slightly more popular than British politics. We are your hosts, Matt Smith.
And I'm Chris Erickson.
And we are your Properteasers. Chris, here we are on episode 4 of the podcast.
Here we are.
And I'd like you to tell us all about how your body is feeling today.
Oh, so I ran the Royal Parks Half Marathon yesterday, and I'm in a world of pain.
You look like it.
I'm too old to be doing half marathons. Truth of the matter, I was actually injured just before. Injured my foot the week before. Had a golf ball sized bruise on my foot, and then I was in bed on Wednesday, not because I was tired, but battling the flu, so I didn't actually think I was going to make it. But we pushed through. It was hell.
True Viking style.
Yeah, it was hell, and I'm paying for it now. Yeah. How was your weekend, Matt?
Mine was very good. I had a lot of drinking and eating, so I'm feeling not so great either, for totally different reasons.
Classic Matt weekend.
Yeah, exactly. And what today we have a special guest, David Huggett, who we'll introduce in a second. So David, you've worked in foreign exchange for 12 plus years, but you've also been an estate agent with 2 major brands.
That's right.
You studied quantity surveying in Nottingham, and you've now set up your own FX business, and in your own words, to demystify the industry. We're very much looking forward to hearing all about this, so welcome.
Thank you. Thanks for having me on.
Well, very good.
Yeah, welcome, David. I thought we could just sort of start with the journey, if you like, in terms of how you got started and everything else. So if you'd like, for the sake of our listeners, sort of share your journey into the foreign exchange industry and what led you to create Lucid Financial Markets.
Yeah, for sure. So as Matt mentioned, I did a degree at Nottingham in construction back in 2000, finished in 2002. And I left uni, went straight into the world of construction and lasted about 12 months. I hated it. It was just not for me. It was sort of stuck in an office, just no contact with people. It was hideous. And at the time, I had been looking through some alternatives, I guess, and Foxtons came up with its recruitment process back then, as I think we all know.
Oh yes,
certainly do,
and have all experienced. And I went along, got the ask in for the interview. Went along, spent the evening at Chiswick Park and met some people and had the quick 10-minute interview and left in really high spirits. Next day, got the call. You haven't got the job.
You haven't got the job.
Haven't got the job.
Wow.
And I can't explain how I guess disappointed I was, dejected, and I that evening I went out to drown my sorrows with some friends and the advice I got, the friend I went out with that evening was, I think at the time she was working in recruitment, and she said, get on the phone tomorrow morning and tell them you've made a terrible mistake. So I did, and I phoned back and I said, look, I think you've made a mistake here. I'm absolutely right for this. And they were like, okay, fine, look, we'll come back to you. And an hour later or so, they phoned back and said, you've got to come meet the main man. And I went in to meet Peter, and following that interview, I got the call next day and said, right, we're going to give you a crack.
Oh, very good.
Yeah, it was the
just
best.
What they're looking for, right?
Exactly right. At the time, it was absolutely the way they operated, and that whole process of the fact that I went out with that person that night for a drink and they gave me that advice was just I believe in that kind of the way things go.
Yeah.
So I spent 4 years at 4 or 5 years at Foxtons.
Wow, that's a long stretch for Foxtons.
Yeah, so I was in Balham for a year, I think, and then I moved to Battersea as a lister, and I left there in, I think, 2008, something like that.
Yeah.
Because I wanted to do the Central London thing. Went to Chesterton, Pimlico, and then Kensington. And then that led to the whole FX thing. And I think it was really post-credit crunch. It was tough. It was a tough business at that time. And, you know, I was kind of 30-ish and I kind of didn't really know what I wanted to do, or kind of what the future held. And I had a vendor that worked in or around currency, and I kind of looked into, I guess, careers in currency or something like that. And again, it kind of all wound back to the beginning, and I got an interview with a broker in the city, and it was something I went along to one afternoon. But again, a bit of a funny turn of events. I'd actually declined the interview because it seemed very, it was sort of $150 a day, very KPI driven, very kind of smash and grab. I thought, what, my brother's a headhunter, and I'd spoken to him about it, and we sort of said, this probably isn't for me. Phoned the recruiter, this isn't for me. They said, fine, okay, as you wish. And then somebody I worked at Foxtons with back in the day worked at this firm. They'd seen my name in the diary, and they said, "Oh, see, Dave Huggett's coming in," and the I guess the PA, whatever, had said, "No, he's not. He's declined." And I got a call from him, and he said, "I see you were coming in, and I see you declined. Let's go out for a beer and talk about it, and I'll tell you the sort of warts and all side of it." And so I did, and talked me through it. And again, it was that sort of chance thing of him seeing my name in the diary. And
all slips into place.
Correct. Went home, and I said to I've been in an agency for I guess 9 years, and it was a big move, and a mortgage, and I think probably I was married at that point, but we sort of, I chatted to my wife about it, and we sort of said, look, let's just give it a roll, give it a go. And I did, and because I was old, I was 31 on a grad scheme, all the guys I'd started with were, 18, 19, whatever. But because of that, I think it allowed me a chance to sort of push through. They wanted to get me in front of clients quicker because it was, just like a, I guess, profile, whatever for it. And then I spent, 11, 12 years, left there.
For the same company?
Same company, yeah. And I started halfway through, I'd started moving a lot of my origination to Europe, Spanish and Portuguese corporates. And I did a lot more on the derivative side. So sort of options, FX options, which there was a big appetite for in that market. So I was in the process of moving to Madrid in 2020. And obviously COVID killed that.
Yeah.
I've been commuting there for 6 months, sort of Monday to Thursday, to try and spin the business up down there and recruit and things like that. And then when COVID hit, Spain was really, really hard hit. It basically shut down, and the city being the city and the way it was, they were still one of the same numbers that didn't exist. And, for me to go down there, and it was a big risk. And I thought, I'd given up all my UK clients at that point, and I thought, well, this is time to kind of call time on this. And I left, and I did some consulting stuff with some other brokers. And then I kind of thought, well, I'm sort of using all my experience and my network, etc., to help these businesses. So I'm not going to go and do this myself. And again, it's my wife that said, look, it's time. You've got to go and do it for yourself.
Yeah.
I'd always talked about it. I'd always wanted to do it. And I did. And here I am, I guess, 14 months later.
Very good.
Yeah.
And tell us, I think, tell our listeners what exactly is FX, because I think maybe some people aren't sure. Let's first clarify that.
Yeah, sure. No, great question. I think so. As I mentioned before, my background is corporate currency, so it's large cap companies that are buying and selling abroad in other currencies. So my largest client at the time was a largest importer of LG, Apple, Xiaomi, Samsung in Spain. So they were buying $200-300 million a year to buy those products, import them, and then they would distribute. They're a distributor, and I would provide strategies around the optimizing when to execute the euro to dollar transaction, whether that was real time or in the future. So using futures and options, forwards and options. But when I left the city and did a bit of work for some other companies, I spotted this kind of, I guess, almost this part of the market that I think is super underserved, the kind of high net worth or large transactions for private clients. So there's a huge amount of money moving around the world, right? Especially in the in the private space. And with the advent of like Revoluts and TransferWise this world, I think currency has become very transactional, but actually it requires a lot more analysis, consultation when there's a currency aspect to any transaction, whether it's transfer of wealth, real estate, immigration, inheritance, whatever it may be. So what I do now, what I what my business does now is it helps people understand the market that they're going to trade in, because FX is it's the most liquid market in the world.
Yeah,
and it never stops moving. And there's a massive misconception that an FX trade is, well, we'll just get the best rate. What's the best rate I can get now? It's what's the best rate I can get this second, because in 10 minutes, 20 minutes, 2 days, a week, it doesn't matter. It's the market's moved and the world's moved on. And then the other side of it is the operational side. So actually moving money from the UK to Europe or to the US or to the Far East or whatever it may be, or Australia, I do quite a bit in Australia now as well, is challenging. There's a huge amount of compliance that goes into these transactions.
What sort of compliance?
Well, it's. I think what's really interesting is I think the banking system, financial world, in the time I've been, even since I've left university, since I went through state agency and then through the city, hasn't really. We've moved on technologically. You can send a payment through an app, right?
Yeah.
But the behind the scenes side of it just hasn't really evolved. It's almost become more clunky and more restrictive because of the checks and balances that are required when moving especially large sums of money. Under certain limits, up to, I think it's like 10,000 or 20,000, not a huge amount of attention is paid. But once you get into the big numbers, you need a lot of...
Just in the UK or all over?
Everywhere. The US banking system, for example, is, it's quite astonishingly poor. I think in places like Canada now, there are certain banks that won't let you transact online. You have to go in, which makes it incredibly challenging for the transaction that FX trade is involved in. So let's just use real estate because it's a really, really prime example. People send funds or they'll execute a transaction, and then the funds may get held by an intermediary bank or a receiving bank. And all the client sees is the funds not arrive. Mm-hmm. You try and call a bank these days, it's a 2-hour hold. You never get the same person twice. Even if you do get through to someone, they don't know you, they don't understand the situation. And therefore, a huge amount of efficiency is lost, but also a huge amount of frustration can be reduced if these trades are managed right. But I think we've kind of gravitated, as the world has, to the sort of technological side of these transactions, and it makes for problems. And they're the problems that I want to try and solve.
Okay. Well, that brings us on to a question that we wanted to ask is what sets Lucid Financial Markets apart from other foreign exchange services?
Yeah, great question. I think, there's, like all industries, there are operators in each industry that you could class as they do one job, whether it's real estate, whether it's medicine, legal, accounting, whatever it may be. But actually, when you drill down, they all have a specialism. And I think I set out on my journey with this business to help, like I say, high value private clients. And I do manage a corporate book as well, but it's part of my business. But on the private client side, it's to help high net worth individuals with large value trades create a better outcome and a better process throughout that transaction, rather than utilizing, which most people would naturally just gravitate to the bank. Very, very expensive, very low service. But also I think without sounding too self-serving, it's pure client first. There's no KPIs, there's no financial targets. I don't operate that model. Mm-hmm. I've been in that world. And look, it's not wrong, but I think it's the client that suffers the most from that. When I worked in the city, you have to fill a quota ultimately to keep your job and to get paid, right? Yeah. And that drives a certain type of behavior. Whether you tell yourself it doesn't or it does, it drives a certain type of behavior.
Of course, yeah.
And being outside that now, it's allowed me to become the best I can be at what I do, because now it's just what's the best outcome for the client.
Right.
The revenue part and all that stuff, it just takes care of itself. But when you allow yourself to step away from the numbers race, you produce your best work, and the client gets a really, really great outcome.
A good quality of service.
Yeah. And I think the only thing I've targeted myself is my kind of review, my Trustpilot, or that's the thing that I care the most about. And actually, when you take care of just that, like I say, the numbers, the revenue, whatever, that kind of takes care of itself.
Why doesn't a high net worth individual have somebody that does this for them? Would they deal directly with a bank? Or?
Yeah, I think in the main, private banks still hold a strong position in that trade. But again, it's a very, very easy place to make for a bank to make money.
Why is it more expensive to trade through banks as opposed to through yourself?
I think that it's the way that revenue is derived from these transactions. So it's from spread. So it's the disparity from the interbank rate to the achieved rate. And I think that's where it's quite murky for a lot of clients. They don't understand that.
Well, just can you explain that just in layman's terms?
Yeah, for sure.
The spread and what exactly that
means? Of course. So the interbank market trades at a rate, which is the rate that the banks essentially trade between, institution levels trade between. And then there's the kind of, I guess, commercial rate, and then there's a retail rate. And a retail rate, you go to an airport and you try and buy currency, it's 10 cents from the interbank rate, right? Your dollar's trading at 130, you're getting 120. And my job is to close that gap a lot so that the client generates more sterling for the euros they're selling, whatever it may be. But it's more about when during the current trading cycle, when are they executing that transaction? The spread bit is measurable because with the internet, with apps, etc., we have access real time to what the interbank market is. So naturally, as humans, our brains go to, we've got to get as close to that as we can.
Yeah.
At the point in which we execute. But the reality is that that's irrelevant if you're trading at the bottom of the market, if you're trading at the bottom of the trading range. So without getting too technical with a client, I want them to have a kind of high level understanding of the market at the time during their time frame. So if it's a real estate transaction, are they looking to exchange now, complete now, whatever? What's that time frame? Are they just beginning their search? Therefore, they need to understand the market they're exposed to because it's going to have an impact. Like we spend a huge amount of time negotiating real estate deals, right?
Yeah.
Buyer and seller. But that can be all that negotiation's burnt in a day's trading in FX if it's not managed and watched and accounted for.
Right.
But the banks will rely on the fact that there's a safety in using the bank, right? There's a feeling of familiarity, and there's a feeling of I guess almost, dare I say it, reliability, despite the fact that I think that there's a big frustration with the banking system right now.
It's just what you're used to, I
Correct.
suppose.
Yeah.
So if someone were, if some of our listeners were buyers or sellers, at what stage is it beneficial for them to be in touch with somebody like yourself?
The longer you have, the longer I have, or anyone, any I guess FX professional has with a client on their case, the more valuable they are, because what I like to do is provide, like I say, an amount of information, whether that's fundamental, market information, what's happening with the economies, what's happening from a technical point of view. I have a technical background, so I use those. The reason I use technicals is because it's visual. You can show, markets move in three directions, right? Up, down, or sideways. That's it. There is nothing else. And you're only ever in one of those, the market's only trading in one of those directions at the time, whether it's near term, long term, short term. But again, it's analyzing the client's situation and helping them. It's kind of talking them back from the edge of going, well, there's always an aspect of a client's transaction that they say, well, if I wait a few days, it might get better.
Yeah.
Yeah, but why? And it might.
And could it also get worse?
Correct, of course. But I think the way I see it is I help my clients get to 51% of a decision, and then stick with that decision wholeheartedly. Mm-hmm. And that's all you can do. It's the same with corporate businesses. When I'm dealing with corporate decision makers, my job isn't to go, I'll give you the best rate. It's not. That's not FX management. That's like going into evaluation and saying, I'll do it for 0.5%. Mm-hmm. If you can't provide the service, or you can't, and we know that's how that's just a race to the bottom, right?
Yeah.
And we know the outcome of that.
Yeah.
And we know what that creates and the type of industry that creates. And I think that's why, again, real estate's a great example. It's very similar. There's this huge emergence of the kind of broker.
Yeah.
Because it allows people to provide a consultative service.
Absolutely.
To act as a consultant rather than like in my world, I position myself as a consultant. I'm not a remitter, I'm a consultant. It's to consult on each client situation, whether it's a private client buying a property or whether it's a corporate client looking to navigate the next 12 months to prevent erosion of their P&L.
So in terms then, David, when you get involved in this transaction, is it pre-exchange, post-exchange?
Oh no, pre for sure.
It's pre-exchange.
Yeah, of course. And then it's a case of, hedging comes into private clients. A client exchanges today and for whatever reason they have a 6-week, 12-week completion.
Yeah.
You want to know you're paying the same, you want to know you're going to pay what you agreed to pay, right?
Yeah.
If you're a net seller of currency to buy sterling and you have a big strengthening in the pound in that 12-week period, if you're talking, big ticket, 4 or 5 million pound properties, they can be on the hook for another 100, 200, 300 grand. It just in the fact that trade hasn't been managed properly.
Yeah.
And I think it's just the challenge is helping people understand that it's as important to manage that transaction as it is the legals or the price you're paying for the property, or you know what I mean?
So if somebody's looking for a property, for example, when they find something that they want to buy at that stage, their money's in the US, say, for example, you are at that point advising them when to lock in the rate and when to bring their money over, depending on the timing of their transaction. You might say, bring it over now, or you might say, my advice would be to wait.
Yeah, for sure. So I think what's really important is, I'm not a speculator. So I don't carry proprietary positions. I don't help people gamble the markets. But what I will do is I'll provide them all the information available to make the best decision possible. Whether that's to trade or not to trade, it's helping them make information-based decisions rather than, again, the financial services will always push a client to execute, right? A lot of all of my private client work is referred.
Yeah.
And a lot of the partners that refer to me have taken a long time to build relationships with because they've had these types of relationships in the past, but they pass the work to the broker and then it's kind of like straight to the dogs, it's like hound the client and just get the deal done. And again, we're all in business to make money. I'm not suggesting otherwise, but these transactions are sensitive. It's people's money. They need to be managed at a level that isn't pushy, that they're presented really high quality information to help them make a decision. I don't tell people what to do. I help them make a decision based on my analysis or the prevailing market or my experience in real estate or financial markets, economies, whatever. And then I believe that they then leave the transaction feeling that they've made a decision based on actual facts and figures. Does that make sense?
Yeah.
Rather than just being railroaded into or scaremongered into trading. And then there's the operational side, which, like I say, is making sure that money gets from the US to the UK in time for exchange completion, so they're not, facing penalties. I mean, a lot of the work I do now is where clients have sent funds internationally and they just don't turn up. They've been sanctioned by or held by a intermediary bank. Client can't reach the bank. Eventually the money turns up. But then, they've got an angry lawyer and a vendor or whatever.
So that's happened with people that about property transactions?
Yeah, for sure, yeah.
Gosh, really? Wow, okay. Yeah, because that can cause all sorts of knock-on effects.
Of course, penalties and, et cetera. And but most importantly, it just makes the transaction really stressful.
Yeah, absolutely.
It's interesting that FX doesn't come into the world of sort of property purchasing, if you like, in the way it should do.
Yeah.
Matt and I come across, we're sort of doing this for the benefit of our listeners, but we do come across this quite regularly.
Yeah.
We had a Cypriot client recently who had all his wealth in the US. And he was obsessed with FX.
Right.
There's an introduction coming there, David, afterwards. But and he kept looking at the rate on a daily basis.
Yeah.
And he's saying, I have to offer £100,000 less because of this.
Yeah.
And most buyers and sellers perhaps don't feel confident enough to speak to a property broker or an estate agent about these sort of things because they think it's sort of above their pay grade or above their understanding. But in reality, it affects most of the clients in London because they're international clients.
Yeah.
So that brings me on to another question in terms of misconceptions. What are some of the most common misconceptions with FX in terms of what people think about FX?
Yeah, I think it's another one of those industries that's, I think I can say this having been one, and looking at real estate again as a great example, is there's a huge amount of people, there's a huge amount of connotations around being an estate agent, right? Or an estate agent is a huge umbrella for many things, which, like I say, is now, I believe, evolved really very much for the better into professional services. But FX is no different. It's a big title for many different aspects of the same asset class, or the management of the same asset class. And I think it comes back for me to, it's the city, and the city's an untrustworthy beast anyway, but also that FX is just so kind of cost-led. There's this thought of just, you've got to get the best rate at the point of execution. And I think it's picking it apart and giving people enough information so they can suddenly go, okay, I can see the trend there, or the momentum, or the what's happened in the past and why it's happened. And like I say, because I use a technical approach or a technical aspect, or part of my analysis is technical, it allows them to see the market rather than just see a number moving on a screen. Because when you have the number moving on the screen, you're just chasing a number. You're just willing something to go your way.
Yeah.
And you don't have the understanding. And I think that's the problem, is there's so much confusion within FX, and so much, it's so easy to spin it up to get someone to do something, that I think that's the real travesty of the whole thing. It's like people are just given information for an outcome that it probably isn't most beneficial to them. It's to the benefit of someone else. Does that make sense?
Yeah, perfectly. And I think you're absolutely right. I mean, you are absolutely right in terms of people look at FX and they think it's just about the best rate.
Correct.
I mean, that starts quite early in your life in terms of just going on holiday, right? And
yeah.
thinking, I'm going to exchange, back in the day we had more currencies before the euro, but I mean, euro to dollar, euro to sterling, whatever it is. And that's the only thing you're looking at. But in essence, you're also facilitating the entire financial transaction.
Yeah.
Making sure the money is coming through correctly. Because with all the due diligence and litigation that's coming across the world, we're seeing this more and more. I mean, we've been advised, there are several countries which we should be very wary about.
Yeah, for sure.
Money's coming from there. I mean, China being one of them,
yeah.
for example. So you're sort of facilitating that entire process as well.
Yeah,
right?
Yeah, for sure. And I think that's a really good point. It's hard to manage the movement of funds, and it's massively underestimated. And I think people go into these transactions, whether it's real estate, whatever, and they don't put enough consideration on this. They get to the point of a deal, or some momentum, or something happening within the transaction they're looking to do, and this bit's kind of becomes it's been treated as an afterthought, and then once it does become relevant to the deal, the problems bring themselves. Whether it's where the money resides right now and where it needs to end up, there's challenges, and again goes back to the question you asked, Matt, which is the longer you have on this to advise a client, the better the transaction is.
Yeah.
And I think that speaks to the point around, a really great deal transaction is great agent, great lawyer, FX if relevant, and if one of those is a weak link, then that ripples across the transaction.
Yeah. We met an ex-colleague the other day who was telling us that a massive deal had fallen through because almost at the point of exchange, they weren't happy with where the money was coming from, and they couldn't basically transact. Which is, I suppose that's also something that you would have discovered presumably earlier on.
Correct. Yeah, and I think as much as that, it's that the clients understand, or that they maybe underestimate the movement of those funds.
Yeah,
and what's required, if there's extra paperwork required, because everything has to meet minimum compliance requirements, right?
Yeah,
and that's. I think what I do now is always front run all that, make sure everything's in place so that when the funds need to move, they just move from start to finish.
Well, Dave, can you talk us through basically how a typical transaction experience would go from start to finish? And I would do right from the word go of an introduction and to get advice. Does somebody have to pay you initially to get advice?
No.
And
I think
how does it work?
It's a really good question. So the initial, I guess, the first port of call is the kind of discovery of the introduction, and then looking at their business case. I mean, whether it's a property transaction or whatever the reason for the currency trade, and then assessing where there is value that can be added. If a client is moving money, it's not a huge amount, or it's a very straightforward transaction, and I've had the chance to look at where they're being executed by the bank, it's not uncommon for me to say, look, you've got everything, you're in good hands.
Right.
You don't need me.
Right.
It's thankfully surprisingly rare that happens, but I think first of all it's always about making sure there's value that can be added. Otherwise, you're just back to chasing numbers, right?
Yeah.
So at that point, let's say there's a movement of funds from the US into the UK is a good example. Moving money out of the US straight to the UK or to Europe is quite challenging because of the banking system in the US. So when you create an account with my business, it gives you access to, first of all, named accounts. So accounts are created in the client's name.
Yeah. And
they're collected into those accounts. So no money goes to me or my business.
Yeah.
It goes from the client's originating account to their account that's been created, be it a dollar account with Commerce Bank in New York, for example. So dollars are collected in the US and then swept back to the UK.
Yeah.
And then traded into a sterling account in their name, so that the funds, when they're sent on to the lawyer or wherever it may be that they need to go, they're received by the client, not from me. Does that make sense?
It does.
So,
and where is that account held? In what?
Varying clearing banks. It's typically Barclays.
Right. Okay.
Can be RBS. Depends on the. It depends on a number of things.
Okay.
But that helps the fluidity of the deal because it removes the need for further checks, AML, etc., from the receiver, and that's not a. It's not a workaround. It just means that there's not. If funds come from my business, then I have to be verified by the. By the lawyer or the receiver.
And I would imagine clients are more comfortable with it going to account in their own name.
Yeah, for sure.
Does it help that we're based in the UK? I read somewhere they said that London is one of the biggest sort of clearing houses in the world in terms of putting money through.
Yeah, London is most of the daily FX flow goes through London.
Globally?
Yeah. It helps in terms of, I guess, from a time zone point of view. You know, I can trade from Sunday night to Friday night at 10 p.m. I think. Yeah. So there's all that. It's an open market from that perspective.
Yeah.
And I think again that's the other part of going back to the earlier question is I don't deal with volume in terms of clients. I don't have hundreds and hundreds of clients. I deal with business cases.
Yeah.
So it's a much smaller number of clients. So that SLA is not reduced, but so that, again, if they need to, I don't know, if they've got a question at 10 o'clock at night, whatever, it gets answered.
How many clients would you typically have at any given time?
Between, I don't know, maybe no more than 10.
Oh, wow. Okay. Yeah. So you really can give an incredible level of service. Okay.
And it does require that. When you get into the actual business end of the transaction, you know, it's very high touch.
Yeah.
And that's it's by design. I want it to be that way.
Right? Yeah, that's exactly how our business works.
I was going to say there's some great synergy. Our magic number is no more than 10 sales listings at any time. Because we, like you, identify that above that level, it becomes tricky to use them more. So that's your one-to-one model. Mm-hmm. As you grow or scale Lucid Financial Markets, how do you maintain that one-to-one model?
This is really interesting. And I think the best way to answer that is looking at what value do I need somebody within the business to be able to offer? And actually, it's the care and attention piece that's as much, if not more important than any kind of market expertise. I see myself becoming more involved in every transaction, but from maybe at a different point in the journey.
Right.
What I want is for people to be able to communicate with the client and not smash them to pieces. That probably doesn't come from people within the industry. It may come from someone within real estate that wants to look at a different career path, or any client service based role that wants to look at maybe working in markets, that has an interest in that. But I think the thing that I'm finding the hardest in terms of people, or I'm always looking for people, and I'm starting to get to a place where I'm reaching capacity. It's the ability, like I say, it's getting away from the numbers or the revenue. It's about just putting that client first and being able to put that client first without destroying the brand, I suppose. It's very, you become very protective of your own brand, right?
Yeah.
Absolutely. And also that's sort of second nature to you as the brand owner, the company owner, because it's your livelihood and it's your reputation on stake.
Yeah.
But when you have to hire someone and try and instill that into a new hire, that it's above the client service and their expertise more than anything else.
Yeah, for sure. Absolutely.
And would that mean that you'd look to have partners rather than employees, perhaps? Or
I love this question, because I think this is interesting for a lot of businesses, and the way that is it entrepreneurs the right word, or the way that new business creators are emerging. I think that with social media, with the access to information, we were talking before obviously about these things, and I think people want to, I think we've evolved into this world where people want more than a salary. And what I mean by that is they want some fulfillment and some ownership, essentially.
Yeah.
So my kind of dream, I guess, if that's the right word, is that everyone's an owner of some description, because I think that's the only way you can create that kind of brand protection and that reliability.
Yeah.
Especially in finance, and especially in this type of industry where I don't want people to fall into the trap of just chasing a paycheck.
Yeah.
That's where I believe the biggest shortcoming is in any financial asset class or aspect of finance. So I think that I want people to want to come on board and take ownership of it.
Yeah.
A stake.
Yeah, and I think that's definitely the right way of doing it.
Yeah.
A classic example of that, totally out of the sort of subject, is John Lewis.
Right.
Who, when you go into John Lewis and you get a really unbelievable level of service, because people are vested in their partners, although they're obviously in trouble at the moment. But that is definitely the way forward. I agree.
Totally.
And you mentioned discussing with your wife when you set up on your own. What were your biggest challenges at the time in terms of when you set it up?
I think when what I've now know. When you start out, you have this like honeymoon period of this, it's your business, and you have your name on a limited company, and you kind of have a little bit of a spring in your step because of it, and that's cool. Like I love that. But the sun sets on that feeling quite quick when you go, you go through 1 month and you're like, I could burn a bit of savings, end of the world. Yeah. Month 2, burn a bit more, and then you get into month 3, and you're like, well, this is like it's got to start to. And then I guess you have aspects of self-doubt and things like that, or whatever it may be. And then I think that the short answer is just client origination, right? The same challenge we all have. Yeah. Is I think you have a great product and a great service, and it's incredibly viable, but the challenge is getting it in front of people. And again, going back to the chat we had pre the podcast was around social media, and I think it's something that I've succumbed to in terms of starting to pursue it, because in just past the 12-month mark, is there much that I've done differently? Maybe not, because I think rather than going out and trying to grab any opportunity I can, I've spent a lot more time on trying to build a brand in this professional services space, which has sometimes been at the cost of potential revenue opportunities. But because of that, having been back to partner meetings or seeing partners, for example, for the 4th and 5th time, it's now I think it's now meant that my brand is stronger. Does that make sense? Yeah. I didn't go out and just chase revenue, which some days you sort of, you miss the paycheck, right?
Yeah.
That's the big thing when it's, midwinter and
Yeah.
it's not coming in and you're kind of, the mortgage is still there and the house is falling down and, but I think that when you stick with it and you come through that, you come, the professional I've become because of those things and because of being able to withstand them has been like, it's been stark. The
Very
difference
good.
I am in the FX guy that I am now that I was.
You find that your life, even though it can be more stressful in terms of not having that paycheck, it just is a much better way of living.
It's a much better way of living. You've got to check yourself, right?
Yeah.
Because it's, you don't have someone, you're not accountable to an employer, I suppose.
Yeah.
But I think that because of that, you become a better person and you become better at the job.
Have you always been a self-motivator?
I've always been really motivated by the kind of, I guess, success over money. And the best example I can give you, I know you guys can relate to, is the Friday board at Foxtons, right? That was the first time I was ever measured or challenged in my job.
Yeah.
And it was just, my sole agenda was always just to be as close to the top of that board as I can.
Yeah.
And that kind of almost like, that's just, it stayed with me. And I.
But that's in front of other people. So it's different when you're on your own. Essentially competing against yourself. That's why I asked if you're a self-motivator. But for example, I find that I'm more motivated because I'm a duo with Chris.
Mm-hmm.
So I always feel like I need to be doing everything that I can so that Chris and I are both doing everything, almost for each other in a way. But because working when you're on your own can sometimes it's not for everyone.
No, it's not. It's a lonely place sometimes.
Yeah.
I think where I've and I have a tremendous amount of envy of you guys, for example, as a duo. Being on my own has been very hard at times because you have no one to celebrate success with, but you have no one to manage the downsides either.
Yeah.
I found people now. I've come, like I say, month 13, 14. I've been able to generate some relationships and things within the industry that they've almost become a substitute to that.
Yeah. People
have championed what I've done or what I'm doing, and they're kind of helping me along that journey. And that's been a really big deal.
Yeah.
Because you can find yourself quite isolated otherwise.
Absolutely. And like lifestyle wise, in terms of with your wife and your children, do you find that you have more quality time?
Yeah, 100%. But I think that's, again, it's taken a long time to evolve out of that, like not 9 to 5, but that structured 5-day-a-week mentality. And I think you get to a place where you end up, you work from 6 a.m. till midnight, but you don't work every hour in between.
Yeah.
And that's the beauty of this, is that you can, and I think managing that time is so important for efficiency. You can go, I know I've had days where I've kind of gone, I felt really busy, but I've achieved nothing.
Yeah.
But then maybe 3 months later, you sort of get the benefit of that. And I think that's the other challenge of being on your own is that accountability.
Yeah.
And making sure that you don't face tough times, right? Absolutely. But I think that the time management bit, it means you can do things, you can live your life, and you can live more.
Yeah, yeah.
And that has a positive knock-on effect to the business as well. And it comes back to the question about people. Anyone that joins the business, I want them to feel that way. I don't want them to feel like an employee. I want them to feel like, you've got to be able to cope with producing results, but on your own terms. Does that make sense?
Yeah, absolutely. Yeah.
I don't want to go right it's this time to this time, and I don't think that suits anyone. I think we're evolving away from that.
Definitely, yeah. Definitely.
I was reading a book recently, How I Built This, by a guy called Guy Raz, who is a presenter on NPR, and it's a great book if you haven't read it. It's all about entrepreneurs. It's some of the biggest companies because he's interviewed over 3,000 senior CEOs and so forth, and he talked about Patagonia. Company, and he said that the founder, his name has now slipped my mind incidentally, but the founder of Patagonia, has very rigid working hours. And that is, he works 6 months of the year and then has 6 months off.
That's right, yeah.
And he says, if the warehouse has burned down, do not call me because I'm not available. I've empowered you to deal with it. You know better than I do what to do if the warehouse burns down. And he said he's tried, his gift, if you like, to his employees is time, which is the one thing that, is finite, right? And he empowers people to be able to do what they want to do, and as long as the work gets done. And I thought, what a wonderful thing. And it's a little bit similar to us as well, right? Because we always work.
Yeah.
Sometimes, there's emails going at 2:00 in the morning and you're thinking, what are you doing? But if you're structured to, because we all have a corporate background, if you're structured to work from 9 to 6, at 6:00, you're switching off.
Yeah.
Unless it's very important, but you are sort of switching off. And if you're not, your spouse is telling you to do so.
Yeah.
But when you have your own company, you're always working. But when you're not working, you can do the laundry, or you can take the kids to school or whatever. And those are very empowering, things for us. So
it's the flexibility it gives you. I think, you can, my business can operate completely online wherever I am. I can work it, I suppose. And that's really nice, because you don't have that feeling of, I can't go because I've got to work, because as long as you're available, you rely on technology, I suppose. But
well, talking about technology, in our industry, as in every industry, AI is a huge, subject at the moment. What's going to be automated and so forth. Where do you think the foreign exchange industry is going to go in the next 5 to 10 years? Any radical changes, or?
Yeah, for sure. I think it would be wrong to think otherwise. But I also think that AI has become a thing of right now. It's kind of, we've had this big emergence, but AI has been around for years.
Yeah.
And it's new in terms of how we use it with ChatGPT and these types of things. I think we can all agree that they're limited. And I think it also highlights the kind of natural human instinct to want to talk to a person. I don't think we're very good at dealing with coping with just machines, like the whole automated answering and stuff like this. It winds us up. And computers are buggy and they won't always get it right. I think there's some amazing AI right now. I'm a huge fan and champion of AI. I think it's really important. But I think also these are service industries, and ultimately, whilst we're real estate experts or FX experts or whatever it may be, legal or otherwise, people will always want the view and the feedback from a human, from someone's experience.
Especially when there's a problem.
Yeah, correct. And I think that's, goes back to the question you asked around what maybe makes this business different to others or competitors, is the problems. We don't buy house insurance hoping our house is going to burn down, and it's exactly the same principle. It's it's when there's issues that you need the reliability or the experience or the understanding, and I think that's what I'm fascinated by within your industry, is that's where the real progress is being made, because people are going, okay, it's not just go on Rightmove, I'll have that one and that's the job done. It's so much more to it. And I'm struggling to understand how AI can disrupt the real estate industry. I think it can disrupt things like markets in terms of how the ideas and information that I maybe present may be done automatically. But again, that's nothing particularly new.
What about things like cryptocurrency?
Crypto, the theory of crypto I think is fascinating. I think it's a really amazing technology, and I don't deal, I guess, in crypto. I don't provide it, but I'm very interested in that industry.
Do you see more governments taking a real hard look at cryptocurrency at the moment and thinking about sort of institutionalizing it? I was thinking about the BRICS meeting that took place not that long ago.
Yeah,
they were talking about sort of having a combined cryptocurrency of some sort.
Yeah, I think it's exactly that. I think it's a very useful technology. I think if it was going to be, I think that's a huge requirement for users of it to become comfortable with crypto. Why are we not all transacting in crypto? Because we can't get our heads around it. Most people, if you say, what is crypto?
And you need a crypto wallet.
Correct.
Yeah, it's not transactional.
Sam
right?
Bankman-Fried scandal, and I think people are
But if I could buy a can of Coke in the off license with cryptocurrency, I would use it.
Right.
But it's not available in that way.
No.
But why would you use it? Why not? just using?
Well, I wouldn't say I would use it over currency, but if suddenly the whole world moved towards cryptocurrency more and more, right, I would be more welcome to it. At the moment, I think of, cryptocurrency and I see volatility.
Yeah.
I see uncertainty. It's not regulated, so where's the ceilings? There are various. I'm just unsure about it. And people that are in crypto, which is every Uber driver I've come into so far in the last couple of years, they love crypto and it's their way out of driving an Uber, right? It's like, we're investing in crypto and, my 10,000 is going to be worth 10 million.
Or 1,000.
Yeah, everyone seems to be investing in it, or buying into it to invest into it. Whilst currency is currency.
Yeah.
It has a different life.
I think that with crypto, there are some amazing businesses that have stayed the course in terms of, starting back in, 16, 17, going through a lot of ups and downs from a regulatory point of view, etc. And they're kind of the other side, and they're close to some very good, or one particularly very good crypto business that acts on, again, more on the private client side for people that want to access crypto but get some semblance of service in return, some understanding, rather than being just transacted through, there's so many ways you can buy crypto, right? And I think people are blindly trading it, and I think there are probably some strategies that might work, but I think it's very risky because it's so reactive. But I think that probably what's more like to happen is that we get digital versions of fiat, and that I don't think fiat currency will ever be replaced, but I think the whole crypto and certainly blockchain technology is hugely fascinating when it comes to things like legals or real estate.
Well, real estate, I was thinking blockchain is,
massive.
It's huge, and it's something that we've looked into several times just to get our heads around it in terms of understanding it. Because I think in the same period of time I just asked you, which was sort of 5 to 10 years, blockchain technology should have a massive impact on real estate transactions.
Yeah. It's the footprint that it can create, and again, the certainty that it offers certain things, whether it's legals or the transactions themselves, it gives you that visibility which doesn't exist otherwise.
Perfect. Should we finish off with the last couple of questions? What advice would you give to someone considering a large foreign exchange transaction for the first time?
I think it's if it's large, it's the larger it is, the more sensitive to the market it becomes. So again, taking proper specialist advice on it is really, really important. Certainly from a market point of view, but also from a operational point of view of how the funds are going to move from one place to another. It's really important people understand the physicality of that transaction and where the potential problems might exist, because I think that can end up being done retrospectively. You hit the problem first and then try and solve it. But I think the most important thing to do is make sure that there are no potential problems that are likely to arise. And that, like I say, that just comes from taking some advice on it. And don't view it as a cheapest rate thing. It's the worst way to make that transaction. The executional side and the guidance around actually putting the trade in place are far more important than the rate. The rate since we've been talking now is different. It will be different again in another hour, and it's about understanding the current market, what the impacts that may have on your transaction, good or bad, and making really good quality decisions off the back of that information.
Thanks, Dave. We're running out of time now, but can you just can you tell our listeners how to get in touch with you? If there's the service that they would like to use. Yeah, for sure. I think the website's the best place, lucidfinancialmarkets.com. You can find all the information on there, all the social media, etc. Which again, I think I'm starting to create content around the process and more aspects of what I do and we do on a daily basis, which hopefully would be really valuable to people. Very good. When we see those posts, we'll share them as well. Yeah, and we'll add your contact details to the podcast as well. Yeah, amazing. Yeah, fantastic. Thank you so much. That was really, really fascinating. Really was. Thanks so much for coming in and speaking with us. Really good. Thanks, David. Thanks, guys.